Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Akramin bin Muhammad Azani, and I will present about an analysis of corporate financial performance, a trend and comparative study. For the introduction, first company is Power Road Berhad, which was established on 23 July 1999 in Johor Bahru, Johor. It is a leading company for developing and promoting herbal energy drinks, enriched with two major rainforest plants. Power Road Berhad is now subsidiary of public company Power Aka Berhad, a company registered on the main exchange of Malaysia Security Berhad. With a determination to promote local product in the international market, Power Road has invested heavily in research and development from traditional ingredient to create its own brand of product. Power Road, which with entrepreneurial spirit, is committed to providing customer with a final choice of high quality product. Effort focused on research and development to develop new and improve existing product is also accelerating its success in the market. The second company is Hap Seng Industrial Berhad. On 4 October 1991, the company was established as Hap Seng Industrial Berhad, which is on 2 November 2000 was later included in the Bursa Malaysia Security Berhad Board. There are three Hap Seng subsidiaries, namely Hap Seng Perusahaan Makanan, HSPM, and Incomic Food Industry Berhad, HSHY. This company is an investment holding company whose subsidiaries make and sell crackers, biscuit, and pastry. After the establishment of Incomic Food Industry Berhad in 1977, for the purpose of managing business, Hap Seng acquired 100% stake in Comics in 2005. Hap Seng nowadays is one of the Malaysia major crackers and biscuit. For the trend analysis, the financial ratio analysis of Power Road Berhad for years 2018 until 2020. The current ratio of Power Road Berhad for 2018 is 1.85 times, while for 2019 is 2.22 and 2020 is at 2.40 times. The performance of Power Road Berhad increased from 2018 to 2019 and also in 2020. It means that the company has good financial resources and higher ability to meet their short term obligation in the future. Quick ratio of Power Road Berhad for 2018 is 1.3 times, while for 2019 is 1.62 times, and 2020 at 1.86 times. The performance of Power Road Berhad increased from 2018 to 2019 and continue 2020. The inventory turnover of Power Road Berhad decreased for 2018 and 2019 at 3.2 to 2.2 times. Therefore, it increased 2.6 times in 2020. The company is remaining under good condition because they can maintain their inventory turnover at the same level. The company show good performance in the year of 2018, while the performance dropped in the years of 2019 and increased a bit in the years of 2020. For the year of 2018, the ratio is 1.10 times. For the years of 2019, the ratio is 1.02 times. And lastly, in the years of 2020, the ratio is 1.03 times. The debt ratio of Power Road Berhad for 2018 is 41.3%. For 2019 is 34%, and for 2020 is 32.6%. The debt ratio of Power Road Berhad decreased from 2018 to 2019. Furthermore, in 2020, the debt ratio of Power Road Berhad continuously dropped to 32.6%. It means that the company is good in managing their debt and indicate lower financial risk, which could prevent the company from bankrupt. The debt to equity ratio of Power Root Berhad show fluctuant pattern, which is 0.7 times in 2018 and 0.5 times in 2019, and maintain until 2020. The lower ratio or percentage of debt to equity means this company has good potential of performance. The net profit margin of Power Root Berhad for 2018 is 2.48%. For 2019 is 8.32%, and for 2020 is 30.40. The net profit margin of Power Root Berhad show an upward trend in 2018 until 2019. During 2020, the company increased drastically to 13.4%. The higher the ratio, the more effective the company at cost control. The return on total asset of Power Root Berhad for 2018 is 2.73%. For 2019 is 8.47%, and for 2020 is 13.74%. The return on total asset of Power Root Berhad show an upward trend in 2018 until 2019. During 2020, the company is increasing to 13.74%. It means the company is able to control costs in their operation and provide more return. Next is the financial ratio analysis of Hab Seng Industrial Berhad for years 2018 until 2020. The company shows the very good performance in the years of 2018 and moderate in 2019, while in the years of 2020 show bad performance for the company. The ratio of the years of 2018 is the highest good performance, which is 2.2 times, and the second highest good performance is 2 times. This higher ratio indicates that company has higher ability to meet in short-term obligation in the future. The company shows the very good performance for the years 2018 and moderate on years 2019, while in the years of 2020 show bad performance for the company. The ratio for years of 2018 is the highest good performance, which is 1.82 times, and the second highest good performance is in year 2019, which is 1.64 times. The higher ratio indicates that the company has higher ability to pay its short-term obligation without having relied on liquidity of current asset. The inventory turnover of Hab Seng Industrial Berhad increased for 2018 and 2019 at 2 and 2.4 times. Therefore, it's dropped 2.1 times in 2020. The company is remain under good condition because they can maintain their inventory turnover at the same level. It means that the company is effective in using their inventory to generate sale. The company show good performance in the years of 2020, while moderate performance in the year of 2019 and low performance in the year of 2018. For the years 2018, the ratio is 0.36 times. For the years of 2019, the ratio is 0.37 times, and lastly in the year of 2020, the ratio is 0.38 times. The higher the ratio in 2020 show that company able to utilize its overall asset and good in managing its asset, while the lower ratio in 2018 shows that company unable to utilize its overall asset and bad in managing its asset. Then the good performance is in the year of 2018, moderate is in the year of 2019, and the bad performance is in the year of 2020. For the year 2018, the ratio is 33.1, which is show the lowest debt ratio. And for the years of 2019, the ratio is 35% for moderate debt ratio. And lastly, the highest debt ratio is in the year of 2020, which is 39%. The good performance is in the year of 2018 and 19. The bad performance is in the year of 2020. The ratio for the year of 2018 and 2019 is 0.5% times. The ratio for years of 2020 is 0.6 times. The good performance is in the year of 2018. The moderate performance is in the year of 2019, and the bad performance is in the year of 2020. For the year 2018, the ratio is 40.8%, which gain more profit, and for years 2019, the ratio is 14.1, which is also gain profit. This indicates that the company has better growth prospect and able to generate net earning to shareholder. For the year of 2018, the ratio is 5.4%, which is gain profit, and for years 2019, the ratio is 5.3%, which also gain profit. This indicates that the company is able to control costs in its operation and provide more return. While in the year of 2020, the ratio is 4.3, which is indicate the company unable to manage their asset and convert investment into profit. For the cross-sectional analysis, the Power Road Berhad current ratio is 2.4 times, which is higher than 1.8 times that obtained by Hub Seng Industry. Therefore, the Power Road Berhad is better company which has a good financial resources and high ability to meet in short-term obligation as compared to Hub Seng Industry. The Power Road Berhad quick ratio is 1.86 times, which is higher than 1.43 times that obtained by Hub Seng Industry. Therefore, the Power Road Berhad is likely better company as compared to Hub Seng Industry. The Power Road Berhad inventory turnover is higher than Hub Seng Industry, which is at 2.6 times. Therefore, the Power Road Berhad and Hub Seng Industry both remain effective in using their inventory to generate sale and have higher contribution to the firm profitability. The Power Road Berhad total asset turnover is higher than Hub Seng Industry, which is at 1.03 times. Therefore, Power Road Berhad and Hub Seng Industry both remain effective in managing their asset and able to utilize their overall asset. The Power Road Berhad debt ratio is 32.6%, which is lower than 39% that obtained by Hub Seng Industry. Therefore, this indicates that the Power Road Berhad is good in managing their debt and has low financial risk, which could cause company bankrupt as compared to Hub Seng Industry. By referring to the result, the debt to equity ratio for Power Road Berhad is 0.5%, 0.5 times, and the debt to equity ratio for Hub Seng Industry Berhad is 0.6 times. Hub Seng Industry Berhad with a higher debt to equity ratio indicate that the more creditor finance such as bank loan is used than the inventor financing. Power Road Berhad with a lower debt to equity implies more stable business, while higher debt to equity ratio is risky to creditor and investor. The Power Road Berhad net profit margin is 13.4%, which is higher than 11.3% that obtained by Hub Seng Industry. Therefore, the Power Road Berhad has better growth prospect and able to generate net earning to their shareholder as compared to Hub Seng company. The Power Road Berhad return on total asset is 30.74%, which is higher than 4.3% that obtained by Hub Seng company. Therefore, the Power Road Berhad is able to control the cost operation and could provide more return as compared to Hub Seng company. For the conclusion, as per overall, both companies have potential to sustain their business after both financial structure have stable record. By following liquidity ratio show that Power Road Berhad have good structure compared to Hub Seng Industry. In terms of current ratio, actually both of them company is still under good condition because their current ratio shows greater than 1. The activity ratio of Power Road Berhad and Hub Seng based on their inventory turnover and total asset turnover, both of firms remain good in managing their asset and able to utilize their overall asset to generate sale. Same goes to leverage ratio, also show that Power Road Berhad have better ratio compared to Hub Seng Industry. By referring to debt to equity ratio, Hub Seng Industry have bad performance compared to Power Road Berhad. Thus, higher debt to equity ratio state that more creditor finance such as finance loans is used than investor financing. Lastly, by referring to the profitability ratio, both companies show good performance as they are gain profit, but Power Road Berhad gain more net profit that is good for the company to be sustained. In profitability ratio, the more the percent of the ratio, the good the performance of the company. By looking to all financial and structure analysis, both company can generate their profit in future because both company will run business that supply all demand from user. For the recommendation, in order to enhance their company and to make sure their company is still relevant in future, first of all, in liquidity ratio, The liquidity ratio will present the company ability to pay their short-term obligation as their come due. A high liquidity ratio indicates a business is holding too much cash that could be utilized in other areas. A low liquidity ratio means a firm may struggle to pay their short-term obligation. Power root was higher than Hub Seng industry. Other than that, in leverage ratio, Power root have better ratio compared Hub Seng. In order to increase leverage ratio, Hub Seng can reduce their debt by reducing their asset. Similarly to the profitability ratio Hub Seng need to be improved. This is because the profitability ratio will present the ability of firm to manage their asset and debts in order to generate earning as compared to expenses over a specific time period.